Hello, hello. Nice. All right, everybody. How are you tonight? We're going to be doing some live business today when we're going to be talking about all the different things that are happening in real estate. Now, we want you to give us some of your postal codes in your area. We're going to be trying to check out live and give you a 10-second appraisal on your property to see if it is something that you are looking for. Now, everybody today is wanting to know which properties and how much they're selling for. And what we normally do is we look for the FSA, that is the forward sorting address. That is the address that we're going to be using for our research today. So if you take a look and give me something like, we're going to pick one today, just let's try M5V. We're going to flip our screen here just to make it a little bit easier for you. How do I do that? Does anyone remember how to flip my screen? Sorry, guys. Flip cam. Nope. Don't need that one. Mirror. Bam. All right. So we're going to be starting off with M5V, or you can give me your postal code. So if we check out M5V today and add that to our search, we're going to try to look at and see what that is doing for as far as prices. If you take a look at the prices today, this is where we're going to try and figure out where we are. So if you look at the beginning of the year, it started at 785,000. So this is always going to be in the last 12 months, 785,000. Where are we today? 833,000 for an average unit inside of that postal code. And that is a 6% up over the last 12 months. But what we need from you are postal codes. If you can give me a postal code of the area that you are in today, then we're going to find out. L4N is our first one for the day. Thank you very much for giving me one. So let's check out L4N. Inside of L4N and see how bad or how good that has become today, L4N. So this is for the entire greater Toronto area. So if we take a look of L4N, man, it is pretty bad. If you look up here in the last 12 months, obviously it peaked over in February, right? So L4N peaked at 1,017,000, but today it's been on a steady decline. It has leveled off through the end part of the summer, but now it's at 740,000. So prices have come down quite a bit in this area. This is for L4N, as you can tell right here. B4A, I'm sorry, Rick, this is for this program that I have is the exact one for Toronto. This is for the greater Toronto region. But why I'm doing this, I operate out of Toronto, and so I have to build these for each area that I work in. But I can tell you that this is the case for most properties in Toronto. So it doesn't really matter if you're in Halifax, if you're in Vancouver, or if you're in Tennessee. This is what we are noticing across the board for all different types of properties. And why is that? We're seeing that because of interest rates. As interest rates go higher, you can afford less and less money. You bought in 2004. That's really fun. Okay, so let's go back. I can go back 20 years. But so if we take a look at this exact same one, L4N, just because we had a comment there about the last 20 years, let's see what this looks like in the past 20 years. So way back in 2007, 8, 9, we know there was a lot of trouble. Look at that bouncing prices that were happening all the way from 350,000 all the way to 750. My God. Doubling in prices, half price, over. Now, if he bought in 2004, that's even before that. But you see how it started off in 2010, pretty low down here, around 300,000, and it has gone up and up and up. So then we can see over here, this is when COVID started, so barely anything. It had this massive pump, so it is correcting. But if you've had this for 20 years, you've made a lot of money, which is why they start telling you the time in real estate is what we have to be watching. But remember, this only happens because of a declining rate of interest. That's what this is. So can you guys give me another postal code in your area? I would love to hear about it. And I'll jump on in and try and give you guys some good information. So if you can give me a postal code, and this is in the greater Toronto area, love for you guys to be able to see a different one if it's something that interests you. So what we're going to do, L3V, thank you very much. Let's check it out. So anybody who's in the Greater Toronto area, feel free to throw something out. JOP, I know that postal code is because my family lives there. But sorry, you guys, I don't have that one. This is for Toronto, Greater Toronto area, L3V. I have to build these for everywhere we go. Violet, if I miss yours, just let me know again if I happen to miss it, okay, and come back to it. We're not going to look at 20-year charts. Almost everybody wants to know what has happened in the last 12 because this is the danger that we've been running through. If we take a look at this L3V, this is for you. It is up down 20%, down 20% in 12 months. Started off at 879 12 months ago, peaked in February at 1,033,000. Today it's down to 698,000. Can you see that? Ooh. That's pretty rough. So sorry, man, about that. If you're living there. Now, we can also be a little bit more precise if you want. We can actually show you your individual type of home. Tell me if you want a condo or a detached home, and I'll take a look at that if that's something that you want. Don Luke, hey, buddy, how are you? We got L3X. This is for Violet, who's looking up her place. L3X is where you're looking for. Let's get it for you, Violet. L3X. All right, here we go. If you can see on the map here, again, this is going to be the last 12 months. If you see here, start off at 1.4 million, peaked in February at 1.6 million, but it's been on a steady decline ever since that we have raised interest rates. Today, we're sitting at 1.2 million. That's where we're sitting today. So there is a lot of room, like good deals happening now if you're buying in cash. But if you're buying on a mortgage, it's really, really rough these days. L3V is Aurelia. Did I look up L3V already, you guys? I think I did. Let me know if I didn't. So this is for Kelly. So if people bought a condo a couple of years ago and now value is lower, should they stick it out for a few years? So we have to go directly to what the banks are saying, because the banks are saying these rates are going to be higher for longer. How long did they say? The direction even yesterday from the U.S. Federal Reserve said it should be this high for 2 years. So make sure that you're careful to try to lock in a lower rate if you can. But I still think that there's going to be a pivot that happens in 2023. The economic information is terrible that's out there. So this should not stick around forever. There will be a much harder economic problem, which will push people to lower rates. M3H is our next one. M3H, let's get that one. This is for Don Luke. M3H. Hey, Wade, how are you? Hope you're good. Great video. Thank you very much for all the pump. I like it. All right, M3H. M3H is, this one's for Don Luke. You're looking here in the past 12 months again. It's up 1% overall. Started at 1 million, peaked at 1.29 over in February, and it's been kind of all over the place. Now we're sitting at 1,061,000 for this postal code. That's what we're sitting at. This is great. Thank you very much, L7B. Let's try to get you going. I can't see your user, and it's just a number, but I'll try to do it for you anyway. L7B. L7B, like Bob, I guess. Yeah, here we go. Let's see how your numbers are doing here. So this is L7B, as you can see right here, 55, last 12 months, it's 20%, 20% up. So it started off at 2.5, now it's 3.4. It's been all over the place, and now it's sitting at $3 million. Now, of course, if you wanted to be more specific, you could tell me if it was a home or a condo, and I can get a little bit more specific for you. But thank you for all these messages. This is great. I'm sorry, I'm trying to get to everybody here. Guys, if I missed it, I'm sorry. I'll just do it again, and I'll try to come back to you, okay? Because there's a lot of messages coming in. All right, guys, let's try your L4H. L4H, let's check you out. This is for Assad. L4H, if you want to check out that L4H in the past 12 months, minus 23%. Bad. Started off at 1.8 million, peaked out at 1.9 million. Today, it is down to 1.4 million. It is coming way, way down. Are you guys seeing a pattern right now? This is happening on all homes everywhere are dropping. But the more expensive the home, the faller it's dropping. The bigger they are, the harder they fall. The cheaper the home, the less it's falling right now. All right, let's check Violet. I think I did yours already, right? Bought in 2018. Well, that's good. You had a big bump. That's great, Violet. Kelly, you're very, very welcome. Thanks very much for coming on. Mortgage is due in September 23. Will you be okay? Violet, this is a great question. So if we take what the banks are telling us, the banks are telling us that the rates are going to be high for 2 years, 2 more years, which is terrible. But in your case, because it's coming up in Q3 next year, most strategists are saying there will be a massive Fed pivot between Q1 and Q3 next year. So somewhere between March and maybe October or something. So you're right in the golden zone. There'll probably be a big pivot by that time. Kelly, you're saying great info. Thank you very much. Appreciate it. L6H, this is for Costa. Let's try and help out Costa inside of his L6H postal code. If you guys have one, you can just give it to me and let me know. L6H. So if we go check out L6H, you guys, this is what he wants to know. In the past 12 months, L6H here started off at 1.4 million, went up to almost 1.6, and now it's on a steady decline down 1.187. So almost 1.2 million is where L6H is doing right now. Now that is homes and condos combined, right? But if you wanted me to separate them, I can do that as well. What will happen to the stock market in 2023? This will happen. Down. Everything is going to go down as those interest rates continue higher. Listen, guys, the mortgages have gone up. That is a leading indicator. We have to look at what people can qualify for to what they can spend on. So even though we sell our homes now, my name is David Ruff. I am a real estate broker here in Toronto, and we have an entire team, and all we specialize in is selling homes for more money and selling them faster. This is what we do every single day. So we're looking at this and we're trying to sell homes for more. So we're looking at the leading indicators. What buyers are we looking for? And the buyers have to qualify for such enormous amounts of money that what you could buy just 10 years ago as a nurse, now you have to be the CEO of a company because you have to qualify for an 8% mortgage, which is insane, right? You can't have a city that only CEOs can live in. It's not possible. Daddy, for POB, I'm sorry, I have L's and M's. I'm in the Greater Toronto region, so I apologize. Banky T5T, so I apologize. This is only for the Greater Toronto area. I have to build these for every area that I'm in, but I'm telling you, they're all like this. It doesn't matter. I look at markets, Montreal, Vancouver, Calgary, Halifax, New Brunswick. I look at Tennessee and Illinois and Florida, and this is happening everywhere. Why? It's because interest rates dictate everything. It is what is a leading indicator. So this, I hope that you're still getting some value from this as well, just because of this is how it is. Sold in 06, waiting till 2023 or 2024 to buy back in. This is for Sam. Great idea, man. The best deals of your life are going to happen in 2023 and 2024. Amazing idea, man, because the best deals of your life are going to happen then. I always say that the next 2 years is going to dictate the next 2 decades of your life. And the next 2 years, I'm going to be buying properties like crazy. Amazing. Pivot down, Violet. Absolutely. I mean, the rates will come down. They can't afford their interest rate. If we're looking at the central banks today, America, Canada, they are now losing money because they cannot pay for the minimum payment, just their interest on their debt with this type of interest rate. More problems coming, which creates more money supply they have to print, which means more problems. So the pivot has already started. They were raising rates 0.75, 0.75, 0.75, 4 times. And now this week they came out with a 0.5, first stage of the pivot. First stage of the pivot, smaller increases. Second stage, no increases. Third stage, decreasing. So we've already entered into the first stage of the pivot. Though they're talking a good game, it's going to stay this way for 2 years. I doubt it. 75-day in air. I got this fun one for about an airport. I don't know. Nathan K62S. Sorry, I don't have that. Gold and silver is amazing, man. Gold and silver will rock it up. Those you who know me know that I've been buying gold and silver for a decade now, more than a decade. Keep stacking that stuff. It's always going to go up in value. Why is it going up in value? It's going up in nominal value, but not in purchasing power. The reason why you buy gold and silver is because it is a preserver of wealth. 1,000 years ago, you could buy a suit with an ounce of gold. 50 years ago, you could buy a suit. Today, you could buy a suit and a nice pair of shoes. I mean, like fancy, the best that you can. It just is the same value all the time. So nominally, gold has gone from $250 all the way to $2,500. But that doesn't matter because it can only buy the same amount of loaves of bread. James from the UK. How are you, buddy? Thank you so much for coming by. Daddy is from Muskoka. Nice. Yeah. Muskoka is an area, for you guys who don't know, this is all cottage area for people who live in Toronto. Beautiful area. I don't work up there too much. Waiting to buy a house next year when prices go down. James O'Farrell, yes, it's going to be a great time because prices are going to be a lot lower. Remember, we're going to be in a really tough economy at that time. And this is the hard part that everybody can't do, is because when they walk into a bad economy, they all of a sudden are going to say, oh my God, I don't want to do it. Let me give you an example. I have about a dozen people who said, the prices are getting too high in 2018, 2019. I'm going to wait and see what happens. 2020 happened. Prices crashed. They said, whoa, it went down. I'm going to wait and see what happens. Prices are going up. I'm going to see what happens. And so we've been through these cycles with a lot of buyers, and they say that they're going to wait till prices get lower. But when they get lower, we're in a very bad situation, like March of 2020. Whereas I have a commercial buyer right around like a week after they did that massive lockdown, a week after, he went out and bought a $5 million property. He says, if no one's buying, I can get a good deal. So you got to go against the mainstream. So next year, when you're thinking of buying, James, you got to have that gut check time to make sure that when times are tough, you got to be willing to go and do it. A lot of good stuff coming in here, you guys. Let me try to get to everybody. M2M, this is what I like to do. I like to help you out on your different properties. M2M, remember, guys, what we're here for, this is for YouTube, Facebook, TikTok, all you guys. If you want to give me a postal code, I can try to get you them and get you some of the prices for them. This is what I do. My name is David Ruff. I'm a broker in Toronto and help you sell your home for a lot more money and a lot faster. If we look at right here, this is the last 12 months, M2M, it started off at 1.4 million. This peaked around in February at 1.35 million. Today, it's sitting at 1.4 million. Do you see that? Wow. That's not a lot of areas that is happening. So, yay. If you want to come on another comment, right? M2M and what type of property, 2-bedroom condo or whatever you're in, and I'll try to be more specific for you. We have to narrow it down more to the absolute type. You're buying a home next with gold. Nice. Nice. Yeah, the money is fake. Do you guys know what this is? This says Credit Suisse, 1 ounce of gold, 99999. Do you see that? This is 1 ounce of gold, right? But everybody should have some gold and silver. You guys know that I preach this all the time. I've been doing it for 10 years, but this is fake gold. You can buy this on AliExpress or Amazon for $5. So I'm warning everybody, please don't buy the fake stuff. This is going to make you lose all your money. Let's check out. This is M2M. Okay, M2M. Do you see that level? We want to figure out that one in a second. M9V. Thank you very much for giving me that one. Let's check out for you. M9V. This is for Mo. M9V is what you want. M9 Victor. Let's see what that is. M9V. And you're in a house, right? He said he's in a house. I'm going to assume that that's a detached home. We're going to look at that. So this is, if you notice right here, in the last 12 months, detached homes in M9V went from 1.2 million, topped out at 1.3. Today it's sitting at 919,000. Do you notice that general decline? The decline is happening because home prices are going down because of interest rates. That's what we're hitting right now. Really, really tough. Do you think you guys hit bottom? No, we're not at bottom yet. Not even close. The interest rates are not going back down to 0% like they were last year. I mean, every bank is saying that right now. So I don't think that's going to happen anytime soon. Violet, yeah, you said this program is cool. Nice. If you want to give me, Violet, your postal code and what type of property, then I'll also do that for you if you want. Sports team highlight. You said LOL. I don't know what I said is funny, but sorry. Gold, silver should be 10 to 15 gold silver ratio, not 80 or 90. In my dreams, it would hit that. in my dreams, but it didn't even hit that in 2011. So I doubt that. That's how it was like 100 years ago. Precious metals, guys, precious metals is amazing. You should have about 10% of your money in gold and silver, all your investable assets in gold and silver. It's amazing. You have a little bit of crypto, right? But only stick with Bitcoin or Ethereum, the big guys, right? And you only put like 1-2% of your stuff in there. It's like schmuck insurance for the long term. Okay, I got a lot of good stuff here, man. Woo! Thank you. Thank you. L6V. Let me, I'm sorry, I got a lot of comments coming in, so I'm just trying to catch up to all you guys. I apologize. L6V, L6V. Let's check out L6V. Who is this for again? It's a user number. I can't get it. Last 12 months, down 26%. Peaked out at 1.1 back in February. And look at this, straight down. $789,000 is what it is right now. Now, again, this is homes and condos put together. If you wanted a more precise one for yourself, reach out to me right here. Contact at Rough Team Realty. Send me a message and I'll give you a call. You can set up a free call with my team. We sell your properties faster and for more money. And we have a lot of technology that we use to do that. All right, L5M. This is for Chase. Hey, Chase, how are you? L5M is what he's looking for, and he's in a semi. Okay, L5M. Let's check out L5M, and we want a semi. Let's go into a semi category, and we're going to help him out with this one. Semi-detached. So there was 132 properties that have sold. That is our sample. Last 12 months, it has gone down 14%. Peaked out at 1.4 million in February. Look at that, street down. Now we're at 1,055,000. That's for L5M. This is for Chase. These are semi-detached properties. That's the only one that's in here. Semi-detached down to 1,055,000. Of course, there could be different qualities in the home. This is every single property sold by every realtor, by every company sold. So it's a combination of all of it. L7B, this is for Aj. L7B. Okay, let's take that out. So you guys, my name is David 7B. My name is David Ruff, and if you want any help, it's absolutely free, 100% free for you to book a time to talk with me to try to sell your home for more money and less hassle. So this is for L7B for Aj. So you guys are up 20%. Unbelievable. Started off at 2.5 million. Today, it's at 3 million. So obviously, this would tell you there's a lot of very, very big properties in that area. So we'd have to get more specific with Aj in finding out how many bedrooms, what type of house, detached, semi-detached, what is it, right? Because this isn't going to give us our answer. L7B, Aj, yeah, L5M, nice. Oh, and he's in a detached home. So let me just look at Aj's. One more thing I'm going to do for him is just to find out what kind of property. Then we're going to move on to the next guy. So it was 140 detached properties have sold. So if we look at all the detaches, and this is not anything else, no semis, townhouses, nothing. Well, it's up 2% in the last 12 months. Started off at 2.7, peaked out at 3.4. Today, 2.8. But we're still seeing this is not, it's a decline, right? 2.8 from 3.4. And that's what we're seeing over and over again. London Patel from the UK and invest in properties in Greater Toronto area. Nice. How are you, Patel? Thank you very much for coming by. Yes, there's a lot of foreign investment that's happening here in Toronto. Insane. Chase, buddy, how are you? Thank you so much for coming on. Drone services. I believe I've seen you on here before, my friend. I don't know why I seem to remember about that, but let's try and help you out. M3J. Remember, if we're on any of the other ones, if you guys are on Facebook or if you're on YouTube, shout it out and I'll try and help you out as well. Okay. So this is for M3J. In the past 12 months, started off at 800,000. We ended up at 900,000 at the peak. Today, we're sitting down at 721,000. That's where we're sitting today. So M3J is down 15% in the past 12 months, but we're down a lot more than that from peak. So this is what we're seeing over and over again. But if you want to reach out with us, you can always do so. And we're going to try to get to whatever you need. It's absolutely free. It doesn't cost you anything. Appointment with me and my team. We help you sell your home for more money, and we do it faster, less hassle. All right, so let's get into Adi Koopa. How are you? Welcome back again, buddy. M9R. I think that I've done your homes before, Adi. I guess you're just wanting to know where else it's going. So this is for one of Adi's homes. If you look in the past 12 months, down 2%, started off at 1.3, peaked at 1.4. Today, it's sitting at 1.28. That's not too bad. That's not too bad at all. So only down 2%. Obviously, it's a bit more from peak. That's nothing compared to some of the other homes. Drone services. I think, oh yeah, you're saying you want me to do just a semi-detached. All right, so let's do a semi-detached inside of M3J. M3J. So if you guys want to know anything about real estate investing and so forth, just let me know. I'm happy to help you out with that. He's looking for a semi-detached. So if you want to give me your postal code, please do so, and I'll help you out with that. Right here. There you go. So M3J last 12 months, down 10%. Started off at $1 million, peaked at 1.2. Today, 900. So it has gone down quite a bit from 1.2 down to 900, right? It's 25%. So it's down quite a bit. And this is all because of interest rates. This is what the interest rates are doing to just the regular people that are out there. Pretty tough. Mortgages by Aubrey. Hey, you're in the business. Well, I mean, the real estate business, right? Aubrey, and you're in Canada. Nice. Okay, so let's check this out for you. M3H. M3H. Yeah, here we go. Let's pull it up. And we're going to go for Aubrey. I want to do detached property because that's what you asked me for. There's 135 properties that have sold in that postal code. So in the past 12 months, down 17%. Started off at 1.7. Look at this in the summer. There must have been some very, very large homes that sold in the summer to push that average up to 2.1. I think that if we dug into it, that's what that would happen. Look at now, we're at 1.4. So in the past 12 months, down 17% from where it started in a 12-month rolling calendar. That's where we are for that one. Mortgages by Aubrey. How are you? Now, I got a user number L5V like Victor. You're asking for some information for L5V. Let's pull it up for you. L5 Victor. All right. Oh, and you want to know if it's on semi-detached. I could do that too. So there's been 44 properties that have sold inside of L5V. L5V semi-detached, last 12 months, down 11%. Peaked at 1.4 in February. Prices went bananas last winter, and look what's happened to the prices. We're down to 1.1 million right today. So again, interest rates are doing this because people can't afford to qualify for an 8% mortgage anymore. Nice. Thank you very much for your questions. Again, Facebook and YouTube, if you guys want to chime in, happy to help you out with some of your stuff there. Do you recommend any bullion? Absolutely. I have a lot of videos on YouTube about that. So if you guys want to go over to my YouTube channel, it's the exact same name, Rough Team Realty. You can go over there. I talk about it all the time. Or you can go to the link in my bio. It's a company that I've used for 20 years because you don't want to get caught buying fake gold. Just yesterday on our live, we had somebody else who said, I got burned by this Aurora coin shop. They sold me fake gold. This is fake. I could buy this for $5. So make sure you're buying from a very, very reputable place. I've been buying for 20 years through the same people. And I have a referral link in here. And you can go to my YouTube channel. I talk about it all the time. Would I buy AMC? Never. I would not buy AMC. Sorry. I don't do that. I'm a very low and slow growth person. And I actually have been buying less and less stocks over the years because I can make a lot more money in real estate. L7A. Niche. Hey, how are you, buddy? Thank you very much for coming on. Niche. L7A is what you're looking for. Let's check that out. L7. Was it A? Yes, it is A. Okay. Let's try and pull up your numbers here. This is what everybody wants to know. How much is it going? L7A, guys, if we check out his, in the last 12 months, down 15%, peaked at 1.4 million. Today is sitting at 1,075,000. So it's down 15% inside of L7A. K6, K9K, I'm sorry. This information I just compiled just for the Greater Toronto area. But this tells you overall, right? Interest rates are pummeling prices everywhere. The majority of homes are down 15, 20%, and they're going to drop another 15 or 20% in 2023. Chase, will the interest rate come down the last few basis points by the mid 2023? Yes, interest rates will be coming down. It's just when will they be coming down? The central banks cannot afford the interest rates where they are today, so they're going to have to reverse. We've already seen the first sign of the pivot. The Fed got a smaller increase this week at only 0.5 instead of 0.75. So we're already seeing the first phase of that pivot. We should see it somewhere in Q2, Q3 next year. Inflation will spike. Yeah. We're in an area where we'll probably have high inflation for the next 4 or 5 years. So you have to gauge yourself for that, because that's going to be coming. What data do the appraisals use to evaluate home prices? Pretty much the only thing they look at is going to be the comparables in your area minus something and a time value. So if all the properties in your area sold for 800,000 2 weeks ago, they're going to look at those 800,000 and say, well, prices have decreased another 5% in those last 2 weeks. So they're going to go 800,000 minus 5%. So yeah, they'll look at those appraisals, and they have a lot to do with what they're going to get for your home. Chase Adams. Yeah, so we're getting some comment here from Sam. Stay away from numismatic gold. Stick to coins like Canadian maples and bars. I'm not even a fan of Canadian maples. This is a fake piece of gold, but they have a real piece of gold that looks the identical. 1 ounce square brick kind of thing, 1 ounce square, not a coin. Notice it doesn't say Canada on it. It doesn't say worth $20. So I buy squares of it. They call them bars is what I buy. If they pivot before inflation is under control, lowering rates will spike inflation. Yes, the government is between a rock and a hard place. They have to choose between high inflation, or they have to choose between high decimation of the country's economy. So it's kill the economy or kill the dollar, and they have to choose one of the two. They can't have both. So today they are definitely choosing the dollar. They're protecting the dollar, and they don't care if the economy dies. But the day will come, probably mid 2023, when they're going to have to save the economy and screw the dollar. How will be Mississauga in 2023 looking to purchase? Well, Sangla, hope that you'll call me. My name is Dave Ruff. I am the broker. We have a team that operates over the entire Greater Toronto area. You can always hit the link up here and book a time with me. It's absolutely free. So I'd love to help you look for a property. 2023 will be tough. Prices will be lower, but interest rates will still be high. So you have to qualify for 2% over whatever the interest rate is. So let's just say the interest rate is 5%. You have to qualify for 7. So it's about working with your mortgage broker and qualifying for a mortgage rate that makes sense. Oh, very, very cool, guys. I hope that we have given you some value on this. Hopefully it's helped you out a lot. So if you have any other postal codes you want me to look up, I'm happy to do so. We're going to be resetting up, and we're going to be doing another show here on our investment calculator. So I'm just going to log off and go back onto that. Is it something that you guys want, your investment calculators? If that is something that interests you, then we could also get into that. 902. Sorry, buddy. What is 902? I don't know what that is. 902. What is 902? So, we're going to be in a really, really, really tough spot over the next 2 years, for sure. We're in a lot of trouble from a government standpoint. We're going to be in a lot of doo-doo. But anyway, what can you do about it, right? All right, guys. So let's do this. So this is a really important calculator for you. I'm going to be doing this for you today, and then you guys could tell me if there's something that you want me to do on this front. So let's take a look at this calculator, and we're going to dive into it because this is how you make millions in real estate. This is how you're going to make millions in real estate. So let's take a property right here for 380,000. It rents for $4,250 a month. And look at this. In 20 years, I'm going to make $2 million on that property. 380,000 will pay me $2 million. So can you retire on $2 million? Yes, you can. But can you retire in 10 years with 707,000? Maybe you can. So this is how we're going to figure out these different properties. And I want you to give me some numbers. So if you give me some numbers like of something that you've purchased, we can do something like that. Do I work in Peterborough? No, I don't work in Peterborough, unfortunately. Canuck Jack, just because you have such a cool name, I'm going to try and find this one. We'll do one before you head out, okay? And then we're going to jump right into that investment calculator. All right, can you see this? Let's hope you can. L1E is what he's looking for. Let's see if we can get into it before it logs me out. L1E is what you're looking for? L1 Edward. So if you guys want me to come help you guys, what we can do is I'm a broker and I can help you sell your property for more money and less hassle. All right. So for L1E, do you see this right here? Last 12 months, peaked out at $1.2 million back in February. Today, sitting at 940,000 total, loss of 17% in a 12-month rolling calendar. So it is down quite a bit, unfortunately. Sorry, guys. All right. So let's take a look. This was for Canuck Jack. So in the East Coast, in the East Coast, I really like New Brunswick. New Brunswick is where I like. But let's just say that you bought a property for $700,000 and maybe you were renting it for $3,000 per month. You see that? We put in how much it is per month, purchase price, what you can rent it for. And there's a couple other numbers that you have to put in. What is your property tax per year? It's at $2,700, which is pretty accurate. Insurance at $240 a month. That's probably quite high. I think it should be less than that. Let's put in $150. We want to keep property management in here and vacancy and repairs. But a lot of people right now are property managing their own properties. So let's put it down to 0% and 20 years at 5% interest rate for 25 years. That's pretty standard on a sale. So what this calculator does is for 700,000 in year one, we'll make 42% on your property. In 5 years, you'll make 250% on your money. In 20 years, you'll have made 1,700% on your money. There's $2.5 million. So you'll make $2.5 million, which is pretty awesome, right? Pretty awesome. Adi Koopa, do you count the cost of future sale like agent commission and lawyer? Listen, no, I don't. That's not in this calculator, but why would it? If I'm making $2.5 million on that property, I don't really care about paying an agent a couple, like $20,000 to sell it or whatever it is. Chase, 800. Okay, good. I got a number from you, Chase. Nice. $815,000, 815,000. And what does it rent for? You said it rents for 2,500. All right. Let's check that out. Woo. Okay, so I don't know, Chase, what your numbers are here. So we got to know what your property tax insurance is and what your interest rate is. Is that something that you could provide to me? But anyway, what I'm at right now is pretty standard. Like it's not going to change too much. But if you want to give me those more details, then I'm going to get into them if you want. That's something you want me to do? 2,500. So this is how that $700,000 property, $2,500 rent is going to pay you $2.5 million at 1,500% over time. 5.25%. 5.25%. There you go. So this is for Chase up there, $815,000 property. which only requires right here a down payment of $163,000 right there. So you're putting 163 out of pocket, $815,000. It's going to make you $2.5 million over 20 years if you do it right. So what this calculator does is it's going to show you your expenses. It shows you over here your current cash flow, all of your cash flow using market rents. It'll also show you your depreciation and your capital cost allowance calculator for 20 years. It also shows you your principal pay down, all the principal pay downs that happen over 20 years. And then it will also have your appreciation in here, and it has your rent appreciation. This calculator is crunching thousands of calculations every second in order to give you the best number. Pretty cool, right? This is the coolest thing. It took us like a long time to make this, but this is what we use to go through a lot of properties. Yeah, Chase, you can get this just by going to the link in my bio. I have a calculator here. We charge $39 for it, but you could build it on your own. But to build it, I can just tell you, it's many thousands of dollars to build this thing. So I've never seen a calculator out there. Maybe I'm wrong. I could never find one where it would have all your cash flows in it, those 4 squares, all of your, this is for depreciation for the US, or capital cost allowance, 20 years of it. Over here is your 20-year principal pay down schedule. After that, we have your appreciation, and we have your rental appreciation over here. And then this is where it calculates all of this together. If you can see over here, it'll say cash flow, principal pay down, tax savings, appreciation, all in it. Cash flow is where you're going to be seeing all of your rent appreciation coming into. Pretty awesome, right? There's a lot of cool stuff in there. Anyway, this is a couple thousand. And so a lot of the words, if you want to know what the words are, we have some definition of what the terms are for you to be able to use that calculator. But this is what people are mostly interested in. How much money do I pay for the property, and how much money will I make over my time? So, you know, if you do it right, if you do this correctly, you're going to make way over 2.4 million if you use all the strategies that I teach you. And I have a lot of stuff on YouTube. We have some courses coming out on that as well. So 2.4 million though, can you retire off of 2.4 million? Hell, you can, for sure. So for you to be able to get that 2.4 million, what do you have to do? You have to be able to put down $163,000. So if you can work like an ass, you know, work like crazy, make the 163,000, it's going to turn into 2.4 million for you, which is pretty incredible, right? And that's what you want. You want to be able to find a way to make this money greater for you. Does anybody else have any other questions for me? So if you want, you guys, you can go and do this on your own because there is, for sure online, there is a cash flow calculator. This one. Okay. This is a very good one if you find just the cash flow calculator. There is also online capital cost allowance calculators that I've seen. They're not very good, but there are capital cost allowance out there. There's also different principal pay down, but nowhere online do they combine all 5 of them. And that's the difference. And definitely not in a 20-year horizon. Everywhere only shows you a 1-year horizon for one of the calculators. This is version 2 right now. I don't have another version past that. Montreal Services, I think you have version 2, right? Montreal Services is a longtime fan, buddy. Thanks very much for coming on. So today we were looking at some property prices in Toronto, but we were also looking at some of this stuff just to help people get pretty jazzed up by all of these prices that you can retire on $2.5 million. Of course you can. And you can retire off $163,000 in your pocket. This is what the potential for making time work for you. Look at that. $163,000 down payment. And you can get that by borrowing that, right? You can go to a hard money lender, or you can do something else and borrow some money from family and friends, and your retirement's already taken care of. You said you can't find the calculator? So you go to the link in my bio. The link in my bio is there. Montreal Services has got it. Or you can go to my website at Rough Team Realty. And on Rough Team Realty, right here is a tab called Investment Calculator. You go to the investment calculator if you want there, and there it is. There's an American version and a Canadian version. You can just dump that in your cart if that's something that interests you. Is that cool? Dimitri. So yeah, go to Rough Team Realty Investment Calculator. Hope you got that. Or you can go to the link in my bio, whatever you want. Which with the current market in the direction, this is for Shane. With the current market, is it the direction to go? I have invested in US market by Canada. Absolutely. Canada has some fantastic markets. Fantastic. And if you want, like, we want the most money the fastest possible. Now, US has a great depreciation. So if we go down here, do you notice that there's this calculator right here, this one? I'm going to make it big for you. Can you see this? It says here depreciation and CCA. So Canada is CCA. That's the free money you get from the government for thanking you for building properties. So CCA is Canada. Depreciation is the United States. There's two types, so you can buy two different types of calendars, but you get more money up front from Canada than you do the US. So it peters out, right? The United States is the same money for 27 and a half years. For Canada, it's 40 years, but it's a lot more at the beginning and a lot less at the end. I love Canada for some reasons, and this is one of them. What is the update with the vacant house tax? Oh, I didn't put one here for the vacant house tax. I've never put that in. I don't know why you would have a vacant house. It doesn't even make sense. So let's take your number just in. Do you see here? Year one is 36%, right? And then here is 2.5 million. Let's take exactly your same scenario. So we're going to zero these out. I'm going to put $1 for rent. Okay. We're going to make it nothing. Now let's watch what happens. So I went from making, what was it, 30 or 40% down to 20. And over my lifetime, now I'm only going to make 1.6 million on the home instead of making 2.4. I want that $800,000. So I would never have an empty house. It goes kind of against everything that I believe in anyway. Yeah, I would never keep my house empty. So do you guys want to give me some numbers and I can try and shoot with some of it if you want? But if the current direction, is it responsible to wait in Canada? So this is the problem that I run into all the time, Shane, is everybody is saying like the market as if it's one thing. And real estate is hyper local. And even if you're within a 10 block radius, it's different if it's a condo or a house or a commercial space, or if it's just a spot for a corner store or for storage. It's very crazy because the condo might be the same. Home prices are down 30%. The commercial lot might be down 50, but the corner store might be up 50%. So it's very hyper local. So there are areas in Canada that are going to be in trouble, but there are other areas that are fantastic. So you can buy properties. I was just looking at one that the replacement cost for the building was $4 million, but I could buy that building today for $2 million. I'm buying the building for half price and I'm getting the land for free. So it's an amazing deal if you can do that, right? So that was a 20 unit condo building, a 12, 15. I don't remember how many units. It was 1.9 million. So if you can buy it at less than the cost of construction, then you're doing good. Thank you guys for all the questions. Montreal Services, we heard about the new vacant tax they want to add in Toronto. Yes, they want to do that, but it's to me kind of crazy that you would ever own something and not rent it out. The majority of all the non-rented out units are for people from China, is the majority that I ever see. China and Saudi Arabia that buy units by the 10, sometimes 100. They own them all. They just put a lock on them and they never open them up. They should be paying a vacant tax, I think. I think so. All right. So, and it's 1% of the total, but guess what? Here's a funny thing about the vacancy tax. The vacancy tax is a volunteer tax. So how many people overseas that bought a unit is going to go, you know what? I want to pay the government more money for no reason. And just, yes, I would like to send you a check. They'd rather just not get caught and pay the fine at that time when it comes, right? Does the model assume a vacancy rate of 100% over said term? Oh, this is really good. The good question. So when we're talking about this, we have the purchase price, remember, but when we go down here, if you notice in this corner right there, let's get that into screen. We have property tax, insurance, gas, etc. Condo fees would be put in there. That was version 2. But notice that we have property management, vacancy at 8%. So 8% is 1 month. So all of these numbers are based on the unit being empty for 1 month a year. So if we remove that and had full vacancy like we have in Toronto, your money goes way, way up. And we put down 1 entire month for repairs. But you guys know if you're in a condo, you're not going to burn through that. So every single month, this model is putting aside some money. If you notice here, vacancy fund is $200 a month. Repairs, $200 a month is going into a separate account. So every month they're getting that $400 getting put into an account, and it's just sitting there in case a unit is empty for a month or in case there is a repair. So what do you do with that $400? Whatever you want. You can buy gold and silver with it. I don't care what you buy, but that reserve is always there for you. Really, really good question. Really good question, Dimitri. Osman, is that in Saskatoon? No, it's not in Saskatoon. It was a unit I was looking at in Alberta. I don't buy in Saskatoon. I don't know why. I just haven't spent a lot of time there. What area? And do you wait for the big downfall? Shane, how are you, buddy? I recognize your name. You've been on here before. What do you mean, what area? Like what areas should you be looking at? And the big downfall doesn't happen everywhere. The big downfall is going to happen in major urban centers. So usually a city over 1 million, that's where the massive decline is going to happen. And the other smaller cities are going to go up. Yeah. So Dimitri, did I answer your question about the occupancy rate? Occupancy rate, no, is not 100%. But let's take a guess here. 815,000 renting for 2,500 a month is going to get me a juicy $2.4 million to retire on in 20 years. 1,500%. There's no stock market that can do that. All right, down here, as you notice, it says 8% for vacancy. But let's just, for your case, remove that vacancy out of there just so that you can see what it would do for you. 0% vacancy. Say that it is 100% full. What does that give us? It'll give us another $100,000 if it's full every single month. So then we bumped up how much we can make every single year. Notice here it's up to 37%, which is great, right? But I always leave it at 8% just to make sure that we're covered. What is the interest rate? The interest rate that we have here right now is 5.25, but you can give me an interest rate that you think that you have right now, and we could work with that. Dimitri, yeah, so I answered your question. Thanks, buddy. Shane, stuff is dropping. Do you wait or jump in now? Stock market is bad. Yeah. Do you wait? Yeah, I'm not buying any stocks now. Absolutely mayhem. Why would you do that to yourself? Don't buy any stocks right now. The only thing that you buy now is maybe gold and silver. And maybe some treasury bills. The risk-free rate now is like 4.2 or something percent. So like park your cash in a treasury, and you're diversified in different bills. So yeah, gold, silver, treasuries. Remember, I'm not a financial advisor. I'm just telling you guys what I do, but I am a real estate broker. I own Rough Team Realty. We work out of Toronto, and we help people make more money long-term, but we work as advisors and consultants to people all over North America. So that's a different service that we offer. But what we primarily do is sell people's homes for more money and less hassle. Just in general, it's a chain reaction. It is a chain reaction, but it depends on interest rates. Interest rates dictate everything, and then it all plays out in a very predictable way. Shane, does that include real estate? Yeah, everything. The interest rates affect all businesses, all jobs, all real estate. Can you tell me what you mean specifically by that? All right, you guys. So like here, we're looking at another property. You want me to guys show you another property I was looking at? So if we look at that property for $1.9 million that I was looking at earlier, that property rented for $18,000 per month. Okay. 1.9 million for $18,000 a month. What is that going to pay me to retire on? In 20 years, it's going to have paid me $9.9 million. Now, I could do some more work. Listen here, the taxes are not going to be that, right? They're going to be like $10,000 a year or something like that. My insurance is easily going to be $500 a month. I'm absolutely going to have property management. So we'll add in property management here. I'm only going to put 20% down, but we have to have property management. We have to have higher insurance and higher taxes. So if we do that and we do it properly, that $1.9 million building at $18,000 of rent is going to pay me $9 million in 20 years. But it's not just finishes at 9. It'll continue paying me every day of my life until I die, forever. But then that's the question. What happens when you die? Well, now I have to pay taxes on $9 million. So why would you have the property in your own name? Why wouldn't you have it in a company name that can live forever and just will that company to somebody else? Shane, you said simple question is it time to invest? Remember, I'm not a financial advisor. I'm a broker that in Toronto, but I can tell you what I do for myself. Is it time to invest? Yes, but it depends in what. I invest in gold and silver and treasuries and gold and silver companies in the stock market. That's what I buy right now. And streaming companies are fantastic. I like those. But I'm waiting for next year. There's going to be some incredible deals next year in general, as tech is going to continue to fall and the stock market's going to be in a lot more trouble. Real estate's going to be in a lot more trouble. Jermac, the only way to make money is through hoping for appreciation, and hope is not a good investment strategy. I agree with you. There's only two types of investments in the world. Number one is the investments that you buy and hope that will go up in the future. That's like a lot of different properties in most urban cities, right? It's the same way for buying NFTs or Bitcoin. It doesn't produce anything. But if you buy a farm that's continually giving you cash flow, then you're in the money. So a $1.9 million building in Toronto is a 2-bedroom condo, and that is not going to be giving you cash flow. The $1.9 million building I was pointing to here pays $18,000 a month in rent. So that would be for $18,000 rent in Toronto. This property would have to be $15 million. There are properties that cash flow for sure, but in the current market, everything is so high. Should you wait? No, that's not correct, Shane. In the current market, there's a lot of properties that are still for sale and people that have to sell. So if you keep looking, then you can do pretty well. So what I do is I use this calculator to be able to look through 100 properties in a day to find properties that are going to cash flow. Be laser focused on this one number, year one total ROI. If you do that, remember this calculator is like pages and pages. It does thousands of calculations for you all at once. Let me shrink it down for you. See how many calculations it's burning nonstop for you? It's pretty incredible. But the way I designed this is so that you could put all your numbers only in the yellow squares up front, and it does it all for you. So let's take some numbers. Give me a number, Shane. So I was looking at a property, another one. It's $500,000. It rents for $4,000 a month. This was for a duplex. $500,000 rents for $4,000 a month. My total taxes a year were $2,500, and my insurance per month was like $100. I think it was 125. So this property, I did have property managed at 9%. I did have 8% for vacancy, 8% for repairs. And let's stick with 5.25, a little high, but that's okay. And what does that give me? That makes me 55% in year one. So if it's over 35%, I'm interested. This has to be over 35. So this deal, 500,000 paying $4,000 a month in rent, for me to get 55%, it's amazing. Look at this. Over time, 2.1 million it's going to pay me in 20 years. So this is the type of deal that you want to be buying. This is your retirement. And remember, it keeps going. Look at this. Between year 10 and 20, it like tripled. Imagine between 20 and 30, it's going to triple again. And it's going to continue paying you for your whole life. So look for deals. But if you use this calculator, which you can get in the link in my bio, you can use this and it'll help you get through 100 properties in a day. Really, really quick. Remember, there's always deals in every market. Right now, property prices, as you see, are just plummeting for everybody. So there's going to be a lot of cool stuff that's going to be happening in the future. I think so. Does anybody want to give me any numbers for me to run on this screen for them? Anybody want to give me any numbers? So what you can do is just give me the purchase price of your unit and what it rents for, and I can try and help you with that. Dimitri, if China succeeds in buying oil with the yuan digital currency, does this collapse the US dollar? Yes. The US dollar is collapsing on its own because of its massive money printing. But if they succeed in being able to accept all of their digital wands for currency, it's just another nail in the coffin for the US dollar. The world is separating in two. So the BRICS countries, and now a whole bunch of others want to join into them. The BRICS countries, in addition to, are going to go against Europe, North America, et cetera, et cetera. So we have to now build all of our own factories here. We're seeing the world separate into two, and it's going to happen. Anthony, how are you, buddy? Hey, you're in real estate too, Anthony. Nice. Anthony Pencham Real Estate. 1.3 million is what he wants. 1.3 million, and it rents for $3,000. All right, you see that? 1.3 million rents for $3,000. Let's make sure it's on the screen there. Rents for $3,000. Anthony, if you want to look right here, Anthony, I'm going to guess this is what your taxes are: 2,500, 125 in insurance. And we're going to keep it property managed. Is that what we're doing? If that is what we're doing, 5.25% rate. So that's the nitty gritty that I have. But if that is the case, you're making 32% on year one. By year 20, you will have made $3.5 million on your property. Is that pretty cool, Anthony? I think it's pretty cool. Pretty awesome. This took us a long time to build this, but I use it a lot. This is how we end up getting a lot of properties for really, really good deals. Be laser focused on how much money here. Be laser focused on the percentage. This right here, this percentage is what's going to make you all your money. So I just look at one square. I don't have to bother. There's thousands of calculations that have to happen for you to make your money. Thousands of calculations. But I built something so that it can do it all for me. And what I really want is to be laser focused on that one number. Buy at 1.3, rent it at 3,000, and make 32%. What do I make in 20 years? What do I make in 20 years? That's what I want to know. That makes me feel good at night. $3.5 million. So what is that $3.5 million going to cost me? It will cost me a down payment of $260,000. So if you can work hard and save up $260,000 or borrow $260 from your parents, then you can have something that'll pay you $3.5 million at the 20-year mark. Pretty awesome, right? I think it's pretty awesome. Thank you, guys. Shane, Dimitri, you're asking how fast it could happen. Here's the thing. The economies of the world always happen a lot slower than you think, but it does tend to go down like this and then off a cliff. So it happens slowly until it happens quickly and something breaks. So it could happen literally in a couple of years, like 2-3 years. I don't think it's going to happen in a couple months. Oh man, I got a lot of comments. Thanks, guys. I'm going to try to make sure that I get to everybody here. Oh boy, I got a lot. Sorry, guys. Shane, your U.S. properties make money. Great. Canadian market is different. Would love to chat in person. Yeah. So what we focus on is helping people buy properties. Yes. And I think you should have this calculator. Shane, if you don't have this calculator, just go to the link in my bio. You can get this calculator. It's $39. So it's like dirt cheap. And it'll help you go through a lot of them. If you want to book an in-person meeting with me, what we do is we also, the meetings that we do with me are to actually sell properties. If you want me to act as a consultant or advisor, you can also write contact at Rough Team Realty. You have to pay for that time, but you can send a message to contact at Rough Team Realty and you can have a chat. Anthony Pension, very good. Nice. Dimitri, you're going to buy the calculator? Yeah, thank you very much. Appreciate it. You're very welcome. If you go to here, link in my bio, or if you guys want, you can go to my website right here. My website is Rough Team Realty, and you can go right here to investment calculator, and that's where you can buy it as well. Let's go back to that calculator because I got another good question coming in here. I got a lot. Brentwood. You said 2 million at 12K a month. Okay, let's run his numbers. Okay, guys, 2 million, 12,000 a month in rent. That's nice. Now, what I don't have his numbers. Okay, 2 million, but property tax on a $2 million property is probably going to be like $12,000. I don't know. Insurance might be $200 a month. Not really sure. what it is, but I'm just going to throw some numbers in there. We're going to say it's property managed at 9%, 8% for vacancy, 8% for repairs. We're going to use 5.25%. Why not? Just leave it in there. We're just looking at rough numbers. $2 million at $12,000 rent will give you 46% year one. At the end of year 5, 284%. And by the end of year 20, guys, look at that. Nice, juicy $7.5 million at year 20. The cool thing is between 10 and 20 years, it triples in value, and it will triple again in another 10 years. So you could be looking at $21 million. And you can have that $21 million in your lifetime for the low cost of 400 grand. Try and board off a family or hustle. And then you could be like Brent and get something like that. Pays out pretty good. Look at this, 46%. Beautiful. Absolutely beautiful. If you can get a 46%er, I'm happy for you. Nice. Remember, if you guys are on YouTube or Instagram or Facebook, you can put some of those numbers down too. Do you have a CFA? No, I am not a Canadian financial advisor. I am a real estate broker. So I run a real estate brokerage in Toronto, and we run Rough Team Realty and sellhigher.ca. So we specialize in selling people's properties for more money and less hassle, and do it faster. After years, decades of doing this stuff, working in real estate, we always come back to those same three things that people want. Sell my home faster, sell it for more money, and I want no hassle. I want it to be done frictionless. And so if we focus on those top three things, that's why we have people that keep coming back, and then their kids come back. What certification do I recommend? I don't know. I have no idea. Sorry, I don't have. What certification would you guys recommend instead of CFA? A certified financial advisor. Not really sure. Why did UK raise interest rate? They're raising interest rates because interest rates, when they go up, they fight high inflation. If inflation goes too high because the government's printed too much money, they need to dilute that and discourage people from spending. So they raise the interest rates and take it away from you. So they want you not to be spending any money. So in order to do that, they just rob you. Basically, they raise that interest rate really high, take it out of your pocket before you have a chance of spending it. So it's forcing you not to have any money left over at the end of the day. Brentwood, you're saying it's $24,000 in property tax. All right, let's change that. $24,000. And maybe your insurance is even higher. Maybe it's $400 a month. Let's say that you doubled it. Brentwood. So Brentwood, we've got $24,000 a year in taxes, $400 a month in insurance. We're going to leave 9% for property management, 8% for vacancy, and 8% for repairs. So that's a whole month, and a little bit more than 1 month. We're going to stick with the 5.25%. Let's see what he's got. So $2 million, $12,000 rent, still at 43%. And at the end of 20 years, he's sitting at 7.2 million. Nice job. Very nice job, Brent. So what this calculator does is it will include, if there's a lot here, but it includes all the calculators here. All of this stuff is the editable stuff, right? Your interest rates and so forth. Cash flow calculators. This one here is a principal pay down calculator. This one here is a capital cost allowance or depreciation calculator. This is the rent growth calculator. This here is your appreciation of your unit calculator. And this is the aggregator that puts it all together. So what that does is we want to figure out all of the numbers really specifically. And that's how we get to exactly how much money that you're going to be making. So there's a couple numbers that you have to change, right? If we get into the nitty gritty, only change the yellow. So we would change what the insurance tells you is the appraised value of your home, the improvement value, and you would put in your marginal tax rate. We also have to enter one number here for what the rent growth calculator will be.